Hello and welcome to another episode of Casual Friday. I'm here with the Duck. We're going to be talking about these riveting markets and maybe superconductors and how to leave crypto if Don gets to guide the conversation. But for the time being, we'll try to keep it on topic. As always, we're brought to you by Woo. Links available in the description below. If you could do us a small favor, if you haven't signed up to Woo or you don't want to use it or you have some complaints or concerns, could you just leave us a comment and we can just dump it directly to the team as to why people either don't like it or aren't interested. So whatever your reason may be, even if it's very arbitrary, you just haven't thought much about it or you don't trust it or you don't like XYZ feature, whatever it is, let us know. We'd be really grateful for that kind of feedback and then we'll get it directly to the team and see if we can make things easier. So with that said, let's talk about the market. Same prices as always, but a bit of contextual stuff has changed and also no shortage of news this week that Don has been more than happy to bear post about. So Don, how are things? How are you doing? Have you quit crypto completely? How long does this show have left?
I mean, the prices do not move, and if the prices don't move, there's no trading. So if this continues, there's gonna be a lot less people employed in crypto. Is what I'm gonna say, including me. But no, it's all good. All jokes aside, obviously not leaving crypto anytime soon, unless the superconductor thing changes things. But I mean, that is unlikely. So we'll see. We'll see how that goes. If it doesn't, I'm gonna be around for a
How
while.
nice of you to stick around and grace us with your bearish presence, Don. We really appreciate it. Also, I don't know if you read the comments for your live streams, but your Wednesday one was very quiet. So maybe you should try using your outside voice so people can actually hear you. What do you think of that proposition?
I don't understand.
So look, at the same,
understand.
let me just make this clear. You want to get into fucking room temperature ambient superconductor stuff, but at the same time, you can't fix your own audio in like 10 weeks of people complaining. So I'm supposed to believe your tech sophistication is incapable of fixing basic audio issues, but at the same time make you a savvy investor in like 21st century complex physics and stuff. Is that correct?
That is roughly correct. No, the thing is, I get like it's so weird because every time I start to stream, I'm like, oh, like how's the audio? Because I get comments, and then like 100 people are like, oh no, the audio is completely fine for me, and I'm like, okay, this must be psyops. But then after the show, like people comment being like, you're not even like I cannot even hear you, and I'm just so confused every time. But I shall continue working on it, which means sitting down, opening the program, being like, oh, this seems fine, and then closing it again.
Classic. You're the most sort of due diligence maximalist in crypto. Just even that amount of work is far above industry standard.
Oh yeah. If I have to use 2 brain cells, it's too much.
Maybe the issue is your live streams are bearish, and so people intuitively just kind of tune it out, and their brain lowers the volume. So the volume itself is actually fine, but because of the substance of what you're saying, it's like, nah, I'm just gonna, not listen to this essentially.
I mean, that's fair enough. I would do the same. Not gonna lie.
That's what I do. Any opinions that I don't like, that they go to 10% volume, and then I have 10 other tabs open, I just give up eventually. So
that's the play, actually.
That's how you become a balanced, well-read individual. But I would know nothing about that. Speaking of knowing nothing about that, we should talk about the markets, Don. Starting with BTC. I'm not going to go through the circus of doing all the higher time frame stuff from monthly to weekly to daily, etc. Because like even the 15-minute is barely moving, right? So you can go watch last week's show if you want that, or the week before that, or the week before that. It's all the same thing pretty much. So I guess I'll rephrase this in a hopefully slightly more interesting way, which is which time frame do you think is most relevant at the moment, and what signal is it giving?
I think it's the weekly, and I mean, I have that one box basically that we closed below, and that we're most likely gonna close below this week.
Is it the single solitary green candle boy?
Okay. Yes, that's the one. And if we close back above there, cool. That's at least a little bit of an indication that this is chopping. Because right now, like to me, it's bearish. If we close above there, it's technically just chopping, and if we go back above like 32, 33K, then we can have a conversation about it being bullish. But that's basically it. I like all the low time frames, all the high time frames, they're all garbage. I mean, the lines, like if you go on the daily, like that's worked quite well. Like we were talking about this pre breakdown candle on the 23rd of July. That was pretty much perfect, nailed the top. But other than that, like it just this market, what it does is like it has one impulse, and the next day it fully engulfs it, and then it goes sideways for 2 weeks, and it does the same thing again. Yeah, so like that just gonna bound to make the chart shitty, and I don't like any of them really. Like I don't like the weekly, but it's the best one. I certainly don't like the daily or the monthly and the low time frames. I mean, the 4-hour chart looks like the weekly looks like the monthly. Like everything is just going sideways / looking garbage to me. As in garbage from a trading perspective, right? Like when stuff is not moving, that's the worst kind of environment for a trader, because if you do squeeze out trades, if this is like, and I've seen a bunch of people kind of do this where they're like flexing their 0.5% movement trades, right? Like the price went from 29.1 to 29.2 or 29.3, and then the flexing, right? And fair enough, like if you do that 100 times, cool. But the problem is that you're gonna pay so much fees on those kind of trades that you have to have massive edge to kind of carry you over that, right? You have to be you just have to beat the market by a lot, and when the market is moving a lot, you don't have to do that, right? So basically you want to maximize the times in the market when it's just moving a lot, because then the fees, which is just negative edge, kind of doesn't matter as much. Like if you have 10% moves, paying a little bit of fees is okay. If you have 1% moves, those fees are going to add up quick. And so when we have this kind of environment, it's just, even if you pick the right spots to enter and exit, you have to be essentially right all the time. Otherwise, you're gonna like have 10 winning trades, and your balance will barely move just based on the fees. So, like it's not really a trading environment. It's more of a just wait and see environment, in my opinion.
Yeah, that's pretty reasonable. I mean, it's basically about like margins, right? Like how much does the environment afford you in terms of, if you're churning fees, if the implied volatility is like sufficiently high, it doesn't really matter too much. Whereas if the rotations are small and tiny, as a percentage of your total P&L, the fees end up being quite big, actually. And that just eats into your P&L and you know your edge as a whole. So that's what's shitty about that. And also, like as a byproduct, it also just encourages you to use higher leverage in these environments for a lot of traders. And you know, when that goes wrong, that also carries greater losses than you would ordinarily have. But the thing is, you kind of have to use derivatives or futures if you're going to be trading this, because if you take, you know, they generally have lower fees and more liquidity than spot markets on average, right? So spot almost kind of isn't an option for like short-term trading, because I mean liquidity is worse and the fees are higher, so you're already struggling to squeeze out edge from trading futures, which have better liquidity and lower fees in general. And if you're thinking about spot, those headwinds are even more in your face essentially. So it's really rough, and I think that's a large part of the reason why no one's been trading these high caps, big caps, and it's all been sort of on-chain degeneracy, DeFi rugs, etc., which is its own valid metagame. But if you're, as we mentioned last week and on all the shows, if you're kind of a mid to high time frame oriented high cap trader, there's been nothing good going on for the most part.
No.
And you know, the time frames just keep getting compressed, the ranges keep getting compressed, volatility is still drifting lower. It's not great. You know, it's one of those things where even, you know, the price is not a bad price. Like 30k BTC, it's like, hell yeah, we're up from 15. But the conditions are so terrible, it might as well be at 15, right? Like in terms of the actual opportunities afforded to you. So.
Oh, I mean, if it was at 15, you'd also be like, oh, 15 is very, like, this is kind of how my mind works. I'm like, 15 is very cheap. Like, I'm happy to buy that. But I'm not happy to buy 30k when it's not moving. Like, that just seems like, basically in my mind, 30k seems like a decent price. Like, I cannot be like, oh, this is like too expensive for
it's like fair value in your mind.
Yeah, and I mean, it's sailor value too.
Did you see his average entry, by the way, in his most recent trade? It was literally all the way. Whoever's doing his execution for him is running a highly profitable trading strategy. What are you going to do, arrest me? Because like, it's like every single wick within that upper range was basically Sailor's average. It's really unbelievable. Well, actually, it's completely believable, isn't it? Like, I guess.
I mean, it makes sense, but it also, like, he's getting royally screwed, or he's doing it himself. Like, you cannot tell me that this is. You'd have to fire the guy. Like, he's been doing this over and over. Like, every time he buys, he manages to buy the wicks, like literally the top wicks, every single time. And I mean, his average is like what, 29.4
something like
or
that,
something. Like he's underwater, even though like he started buying at like 10K, which is quite impressive. But then again, he's kind of been leveraging his kind of like shitty company. Let's be real, right? Like, no real.
Hey, it's a business intelligence company, Don. God.
Yeah, but I mean, it was going nowhere, right? And everyone kind of agreed. And he's managed to leverage that into a huge position in Bitcoin. So fair game to him. I think he's done for really well for himself, right, with this strategy. So yeah, but it's still a little bit odd. Like, the execution is complete garbage. He kind of always buys when price goes up. Like, I don't think he bought at 15K at all. I think he started buying like at 30K.
That's what you get
like,
when you wait for confirmation, Don. He's one of those traders, like.
Oh yeah.
It's like, I'll wait for confirmation above 30K. It goes to $30,001. He's like, yep, good, punt it.
Oh, I had people commenting, being like, "Don, did you buy above 30K like you said?" And I'm like, "Oh, Jesus Christ!
You were too busy buying Litecoin, weren't you?"
How many years do I have to talk about this stuff before people get it? But then again, I realized, like, there's also just people that are new, which always feels odd, because like there's so many faces and so many names that I see from 5, 6, 7 years ago, right? It's a little bit funny that there's also a few new people coming in, which is always good. We need new people. We need a lot more new people to be able to dump on them.
You mean strategically rebalance our portfolio holdings?
Oh yes, I like that better.
Same. I mean, they won't, but I'll sleep like 2% better at night if I can make it sound fancy, But we got dumped on in the early days, unknowingly or unknowingly. It's a rite of passage, essentially.
Oh, dude! Like, back in 2017, like when we basically both started our Twitter journey, like we had like for me at least, I don't quite remember how it was for you, but I was like in the market before I did the whole Twitter thing.
Yes, I was by a few months as well. Yeah.
So I was doing my thing, and I was happily doing them. And then I was like, "Oh, there's this Twitter thing," and I logged in, and people were giving advice. I was like, "They must know what they're talking about." And every single time was just completely garbage. Like, I was doing quite well for myself, and then I was like, "Oh, but these people make it look like it's so easy, whatever." And every time I did anything that anyone on Twitter posted, I was just losing money. In a market where it was pretty much impossible to lose money. So I was like, "Oh, this is kind of."
Oh yeah, I was exit liquidity for like the first half of 2017. Just straight up, every single. I would just go on. You remember Crypto Moco and a few other people. I thought I was being intelligent, and I was like, okay, well, this person seems credible and like they make money, so I'm gonna scroll all the way back through. I'm gonna follow the stuff that they say now, but also I'm gonna be really intelligent about this and scroll back to things they were saying weeks and months ago, because those tokens are still good tokens, right? So I was both like present day exit liquidity, but I was also like stale bag holder exit liquidity. So it's like the worst of the worst. And the first 2-3 kind of few £100 deposits I made as a uni student just went straight to garbage shit coins that went to zero, and I got dumped on instantly and didn't make any money. So that was fun.
Yeah, absolutely.
And nothing has changed.
Yeah, I mean, it's just that was a completely different kind of environment, where it was actually just, I mean, I don't want to insult anyone from back then, but there was a lot of morons around that actually, because right, like today people will tell you like, "Hey, this is garbage," but I mean, price will go up, right? Back then people were like, "This is literally the future of finance. This is gonna change the world."
That's also a key difference, right?
Yeah, and you're gonna be buying VeChain, and it's gonna like do the whole shipping, like gonna change the whole shipping landscape and whatever. Like, it was funny. Like, it was very, very funny. Nowadays it's a little bit more professional, I would say, where people are just at least like not pretending like something is gonna change the world by tomorrow.
Well, they're more creative with their lies in general, I guess, is another way to phrase it.
Yes.
But the game stays the same. You know, those rules don't change.
Always. I mean, and people will always dump on you at some point.
Yes.
Yeah, so it's just how it goes, especially in the altcoin space, right? Like, I think I have no problems with anyone dumping like Bitcoin or ETH on anyone, right? I think that's just fair. These are like decent assets, but like when you sell people dreams in the altcoin world and then dump on them, that's something that I don't agree with. That's actually back then why I was making my Twitter account. If you remember, like I was like, these guys are fucking morons. Like I can do this better. And then I started the Twitter account and just basically insulted people on my timeline.
Yes, Don, you've been a moral grandstander from day zero, I think.
Oh,
now this is your return to tradition story. Yeah.
Oh yeah, absolutely beautiful. I was just telling people they were morons. And the best thing is, like, and this is how, like, a part of how my account like took off is I would comment in people's tweets being like they were morons. They would respond back, and then the market dumped, right? And made them look stupid and made me look very smart. Which could not be further from the truth, but at least at least it worked.
I mean, when that's your opposition, you know, the bar isn't particularly high. But I think the average IQ of like crypto Twitter has gone up a lot. Like the average trader now is, you know, in terms of like the tools they're using and frameworks, and also like the educational materials available to them, you're sort of a better position than ever before. So I guess that much is a plus.
But also your position is now better, right? Because back then it was so fucking easy.
True.
And now you have to actually do something for your money, right? Back then it was just picking it up. Nowadays you have to work a little bit, in my opinion, anyway.
Yeah, that's the trade-off, right? You've got better tools, better information, all that stuff's been upgraded, but so is the difficulty of the game. It's like, you know, higher levels, more difficult enemies, but you have better kit, essentially. So, now, where that leaves us with everything else, as far as going back to BTC, I think your weekly view is quite clear, where that green boy cluster, if we close below that, which is, I mean, we closed below it last week, and this week kind of looks like a retest week. If you take that specific level. I was also interested in the one slightly below it, that sort of lower high level at 29.2. I made the case on Monday markets that I could see a squeeze if we spike previous week's low and rally, which is what happened, and that's nice. But I did FUD that same trade, and the argument I made for FUDding it was like, if you're doing business at the lows and you catch a wick, that's fine. But the reason I don't like taking the market from, let's say, that daily 29.4 as a kind of reclaim long is because 30K is sitting right on your head, you know, that daily cluster green boy that you mentioned. So that gives you no space between the quote-unquote confirmation reclaim level of 29.4 and you long that flip. And there's just no space until you get bonked in the head by like a much better level. And that's exactly what happened. So I think in general, when I look at medium time frame trades, I want to see space. Right? The level where I'm doing business, and then the next important level where I think the market is likely to go. And if there's something like right above me if I want to buy it, or right below me if I want to sell it, especially if there's a better level, then a lot of the times I'm just going to step away because there isn't that sort of space for price to develop or, you know, to even reasonably superimpose some sort of risk reward that makes sense. I think the way most people use risk reward is actually very, it's just not very helpful. Because they kind of just put it where they want it to be, as opposed to assessing, I guess, probabilistically, what are the real obstacles to this trade, or at least where are the areas that I might have to manage it more actively. I think most people are like, okay, this is a good level to buy. Here's an invalidation, usually at some random wick. And then target-wise, they'll kind of just move it up until they reach some arbitrary threshold because they read it on baby pips. Like, oh, it's a 2-to-1, good, so this is my take profit, you know? And it's a sort of classic case of imposing your view on the market, which is generally not advisable. But before getting carried too far away in that side note, I really think there isn't a whole lot else to say for BTC. If you want the weekly to be rescued, at the very least, you want above 29.3-ish. I'm also fine with your more conservative case of above 29.9. Because we did spend some time there before breaking down in the last couple of weeks. And then if it gets above 29.9, the last 2 weeks will essentially be your kind of deviation looking structure, you know, the lows that didn't really lead to continuation. And that gives you a nice weekly swing invalidation to look for, you know, the 8th test of 31.32. And then maybe you've got a chance of a breakout. So I think from the weekly perspective, that's the clearest. If you want earlier signals of some sort, I still think that, especially now that we've tested it once, that same daily cluster, which is and the good thing is it aligns exactly with the weekly level that you mentioned at 29.8, 29.9. So if you start getting a daily close above there, then your daily time frame looks good, and then in the weekly it kind of spills over to the weekly, and that starts to look decent as well. That could just result in chop. Sometimes reclaims, if the market isn't strong, don't do anything. Same with if the market is weak. But at least you have an argument at that point that, we've already retested this resistance. We've been choppy. The breakdown failed. And now we're above a contextually important level. So if there's anywhere for buyers to step in, it kind of has to be at this point. They've actually been given an advantage or an opportunity of some sort. So, from an analytical point of view, still seems like stuff close to 30K is the most relevant structure, and most of the higher time frames start to look a bit more palatable than they are now if the market does that. But for the time being, that's just resistance. Like wicked into it, but looks like we closed below it, so that needs some fixing. In terms of downside stuff, did you change your views on your Wednesday stream in terms of where you're looking for? Because I know you spoke a bit about on Twitter, sort of 27.4, that daily kind of range before the mega ETF candle started coming in. I think on the weekly, in general, we had a long discussion last week that we're not going to rehash about the risks of the mid-20s. We also wrote about it in Technical Roundup, where essentially it's a nice contextual level for a higher low. But if there's like an ETF buyer retrace, or basically the market pushes deep enough to where those guys are underwater, you might get some jitters. So if this doesn't reclaim 30K, what's your most up-to-date view in terms of levels where you're like, okay, I don't care, it didn't show strength, but now it's discounted enough to where I'm not going to pivot completely to superconductors?
So I mean, like buying, do you mean as in supports,
yes.
right? Yeah. I think 20K is interesting from a high time frame perspective, which I know is quite far away. So like there's one more level, like you said, this daily at 27.4. I could see us bounce there, and that might be interesting. It's not something that I would want to blind bid, right? Because I think if we break down and get all the way down there, we retraced most of the whole ETF pump, and that is very bad news, I think, in general. Like you have good news and that gets full retraced, that usually leads to much more downside. But it's still support, so I could see us like go in there, bounce a little bit. But in general, like I'm looking at 20K. I want to see either 30K like solidly reclaimed or 20K. In between both of those, the market's just going to be very shitty, I think. And when the market's shitty, there's not that much to do. You can catch some wicks and sell it for 1 or 2%. But that's going to take so much, like that's so much energy spent for something that you will get once this market is a little bit better in like a day or two, right? Like on good days, Bitcoin sometimes does 10, 20%. And then like I don't want to be stuck trading a 1 or 2% range.
I don't know, Don, where's your Sigma grindset mindset? Every tick is important.
Oh yeah. Every tick is important to get you liquidated. That's basically the mindset there. I think like if you trade too much in these conditions, like more likely than not, you will lose money, and then you're gonna go on full tilt, and you're gonna try to kind of make it back or whatever. I've seen this a million times where people are like losing money dumb ways, and then they're like, ah shit, but I can make it back. Just like start out with the low leverage and then keep on raising the leverage bar until there's just nothing left. And I cannot recommend. For me, it just makes sense to trade when the market is good and not trade when the market is bad, and it's clearly bad right now. So 27.4, that's like the earliest, besides obviously the reclaim. And if that doesn't do anything, then I'm looking at 20K. And at 20K, you can get me excited again, because that seems pretty cheap. Like I think at that point, people are selling too cheap. And I like when people sell too cheap. So that'd be interesting. Right now, though, like if you think about it, technically, we've been in this kind of range here for 140 days, right? Like if you go all the way back to March, where we basically set highs. We obviously went a little bit higher, but like the highs that we set in March, and that's what we're trading right now. So basically, ever since the 22nd of March, This thing has not moved. We had a little bit of a deviation low and high, but it's just not moved. And that is while the S&P went crazy, while all other markets did wild shit and traded really well. And yeah, that just makes me think like until that significantly changes or until I have significant evidence that it will change, I'm not going to bother.
Yeah, I think that's a reasonable summary. And the levels make sense. And also the levels are working, even in these crappy market conditions, like, 30K resisted, for example. It's still relevant. And that essentially leaves a reasonably clear roadmap from a swing perspective, which is you get arguments in your corner above 30, you get a weaker form at 27.4, or you wait for the higher time frame rotation discount somewhere close to 20K. And that's it.
Yeah.
That those are really the important areas. And it breaks down quite nicely as well, where 30K, let's say that's a form of range high, 20K, let's say that's a form of range low, and 26, 27, you can be generous and have that as a rough midpoint. And that also reflects the conviction levels in those levels as well. So not the worst way to splice it up, I think. And also, just as a contextual breaking the fourth wall clue, part of the reason why we sort of go on these tangents and talk about like fees and confirmation and all these other trading related things is because we make an hour and a half show every week for a market that's barely moving out of the stuff we trade. So this would be very short and very boring and not educational or interesting whatsoever if we just went BTC, because it would take us about 2 minutes to say it looks bad below 30K. It either has to go a bit lower to 27.4 or a lot lower to 20 to get interesting. And that's it, right? And for ETH, we'd just laugh for 2 minutes. And then we'd look at altcoins and say most of them look like garbage. Dude. And that would be like a 8-minute segment.
We have to talk about Litecoin.
We will talk about like I know you I know you're foaming at the mouth to talk about Litecoin. And we will get there. But before that, we have to touch ETH. Hopefully BTC is clear. I think it's a reasonably accessible roadmap. And if volatility stays this way, I don't see it changing in terms of the levels that are relevant. The only other argument I'd like to bring to your attention is because volatility has been so low, people have obviously been comparing it to previous episodes where sort of the volatility index, whatever measure they're using, has been this low. And I think from the chart that I saw, and I forget the author, so apologies, there have been more kind of like 8 instances historically of where Bitcoin volatility has been this crappy and low specifically. And I think it's like a majority of them, maybe like 6 or 7 out of 8, ended in upside breaks. Obviously, vol will pick up eventually. Do you think when it does, it will deviate from previous examples and actually break down as opposed to break up? Or could it be one of those where it sort of drifts lower and then vol picks up and then it runs up but hits resistance and still looks like shit? Because basically people are making a direct connection between low volatility and then the resolution of that low volatility historically being favorable to upside, right? Or favorable to bulls, whatever. Have you wrestled with this data or thought about low volatility resolution one way or another?
Not really, no. Like I think in general, normally when stuff goes sideways like this, I get bullish, right? Like when this is like when the market is so shit and so boring that people are not interested in trading it, I usually get bullish, right? So I do agree with like how it usually plays out just from like just looking at markets. I don't even like look at the I don't need to look at the historical values, just how it's been playing out whenever I've been trading, right? Like the market gets so boring that no one wants to trade it, it's usually a good sign. The reason why I feel like this is a bad sign in this instance is because we had all the reasons to go up, right? Like back in the past when we had like these low volatility trading periods, like basically when we broke down 6K and we're trading at 3 or 4, like between 3 and 4K, there was really no reason, like news-wise and otherwise, to go up. It was just cheap, right? Like people were willing to buy it at 3 or 4K, willing to go out on a limb. But it wasn't like we were getting bombarded by good news, right? And then like we've had a bunch of these kind of like periods where it just goes sideways. And then goes up, but usually there's not really a reason for it to go up after the sideways or during the sideways. It's just it goes up because people want to buy it. Right now, it feels like people wanted to buy this thing because of the ETF reason, right? Like they wanted to get in on this thing because they're like, oh, if the ETF is approved, we're gonna go up. And instead, we're getting low volatility chop. That means like a bunch of people are sitting there in positions that they don't necessarily like bought because of conviction, like it used to be, but because they're like, oh, there's like big news coming, whatever. And that's not necessarily my favorite. So yes, historically speaking, and just like from what I've observed, like whenever the market gets this boring, that's good. But in this case, I actually don't like it because it shouldn't be boring. I think we had plenty of reasons to go up and we didn't. And then low volatility in those kind of circumstances just looks bad to me. I could obviously be wrong. But for me, just the way I look at this thing is basically we had all the reasons to go up. We didn't. What we got instead is low volatility chop and a bunch of kind of garbage trading conditions, and that's like a bearish thing to me. But data, obviously, and I do agree with whoever posted it. I don't know where you saw it, but just from thinking back how markets have played out in crypto, usually a good sign. In this case, I would say not so good. But
so this time is different is the summary version of the argument.
Yeah, because the thing is, like, usually you get these periods also, like you get these like long drawn out like sideways periods. You get them usually at like after like massive trending down environments,
sure.
right? Like you look at 3 or 4K, you look at like just back through history, and usually like whenever Bitcoin goes like massively sideways, it's usually after like an impulse to the downside. So you have an impulse to the downside, you go sideways, and then you come back up. In this case, we've had an impulse to the upside, good news, we still go sideways, and that's a harder call to make. But I don't know. We'll see. We'll see how it plays out. I think in general, like all the data in the world isn't going to help you. It's just you want to see life return to the market, and then you can make better decisions. Because right now, it's a bunch of like people trying to squeeze a little bit of water out of this rock, and not even they are getting it. So yeah, I don't think it matters too much. Like whatever you find, I think this is basically a coin toss. Slash, I think it's a little bit favored in that, but that might just be because I don't have exposure. So I think it just makes sense to wait. You don't have to take a gamble when it's this uncertain. And yeah, when it's uncertain, you don't want to take gambles in general.
Yeah, it's like, what are you missing out on at this specific stage in the market as well, right? Like as a high cap, more liquid trader, the answer is close to nothing. So
even as a low cap guy, right? Like I got so much shit. Like people are like, "Oh, you should have been in Bolt. You should have been in that, and you should have been in that." And then everyone got rugged, right? Like literally, like these market conditions are so bad that people start rugging projects before they have a market cap above like what 25 million. Yeah. And then you have a bunch of influencers on Twitter shilling some kind of garbage to their followers, and that's the only liquidity that is in the market, right? Like squeezing the last few dollars out of people that have already been squeezed. I don't know. Like it's been better because it's been volatile at least, right? But also it's been very predatory, yes. Whatever. And it's been like just in general, like even the big projects like Bolt, like yeah, a bunch of others have just been rug pulls in the end. So it's a tough environment. People are basically looking at this and trading this as if it was still trading at 10K, like 5K after a massive bear market. This is like major PvP vibes, which is kind of odd given we've doubled from the bottom. So you'd think people have more money and don't need to do this. But it just seems like the bear market was so brutal that that's kind of what everyone resorts to. And fair enough, but that's not necessarily like where I want to be. I think there's better environments and better
there
ways
are better
to trade.
superconductors than low and mid cap
Exactly.
alts. Yeah, now that you mention it, sort of contextually speaking, when the whole influencer meme coin, their own project, rug bonanza happened, that was around 30K. And it's like, really, guys, we're doing this now after a double from the lows in like almost a vertical fashion. That's when you decide, like, okay, I need to pretty much be as exploitative as possible. I mean, if you want to be charitable about it, the way you'd phrase it is, people are just euphorics and they naturally went really far out on the risk curve type of thing. But that's, I think, too charitable in this instance. Like, you shouldn't see this degree of like scammy, predatory PvP, zero rotations, nothing stakes. It's all steal from Paul to pay Bob type of thing. 2x off the lows. Although, of course, it could just be a symptom of volatility more so than the price action itself, but it's probably both, I imagine.
I think it's also like a part of basically these people that are like rugging left, right, and center. They missed out on the move.
Right.
And they're trying to get back in, basically. And a good way to get back in is just stealing from people, right? Because then you don't actually have to buy it yourself. But
I'm just making notes here. Yeah, go on, please.
But that's obviously not what you want to be doing, because a lot of these people will go to jail. So put that in your notes as well. I would hope anyway.
I've written down in very small font at the very bottom. So.
But yeah, it's been wild, and the market has been like, volumes have been going down, and the interesting bit is that like a lot of the exchanges have been struggling anyway, right? Like, even before like these 140 days of sideways that we've had now, a lot of the exchanges have been losing volumes for a long time and have been like firing left, right, and center, right? Like, we've been seeing pretty much all the major exchanges just letting people go, and there's barely any new VC money coming in either. So like, financing is pretty rough. So that's going to be like an interesting one if this continues. Like, if we keep going sideways for another 150 to like a year or whatever, I wonder like how the runway for a lot of these exchanges or crypto companies as a whole is going to look like, because the only way to kind of make money right now is PvP, right? And PvP in a way where you don't really get the volumes that you would usually get. So it's like, it's a hustle, and people have to, like, they're fighting for their survival on all sides, right? Like, people are doing it with their rug pulls, exchanges are doing it with like odd listings and odd launch pads, and like in general just like trying to stay relevant. And yeah, it's a fight for their lives out there, and that's coming in like we talked about at a 2x at the bottom. So it's an interesting situation. I cannot recollect a situation where we've been this like similar, where people and like exchanges and bigger players in the space got so wrecked after the market basically doubled. Like, imagine if we stayed at 15K for a while, like everyone would have just gotten like completely blown out, like even on the exchange side of things.
Yeah. It's like peak cynicism also in the industry to some extent. I think that's been spurred by two things. The first is just the magnitude of like the fraud that happened in 2021 just completely raised the bar. So people are now more willing to sort of overlook smaller cases of that and things that are in the gray area between PvP and straight up just like exploitative stealing from people. You can be a market maxi and be like, oh, it's always been PvP and it's just in the order book type of thing. But there are obviously some forms of conduct that you can reasonably and meaningfully separate from others when it comes to trading. You know, like someone just firing orders into a central limit order book versus an insider having this mega shitcoin seed allocation and then shitting it on their followers. Like, I'm willing to distinguish between those two types of conduct, even if someone else isn't, who has a more, I guess, purist view of markets. And the second part is that just over time, and as you and I have observed since 2017, the trend of sort of having gentlemen's agreements about shilling and like accountability in the space and people caring about, oh, why are you sharing this token given this is the market cap, this is the liquidity, and this is your follow account, those things don't add up. That just went completely out the window with Uniswap, with meme coins, and just a general apathy towards keeping those kind of good faith understandings in place. We basically, and you know, all the casino rollbit drama as well and the arguments surrounding that, people have just given up on caring when it comes to that side of the equation. So now it's like everything is fair game. And the only thing you have to think about if you're somewhat intelligent is like your legal risk, essentially. But in terms of, you know, ethical stuff or code of conduct, unofficial code of conduct, if you will, all of that stuff, and, you know, self-policing in the community itself, all of that is gone completely. It's sort of every man for himself, which ironically, you know, bolsters the PvP case that you outlined. So it's like peak cynicism is how I frame it in my mind. And if you don't have an edge there, and if you're not the cynical one spinning up the project, then you're probably on the wrong end of it. So Or there is no right end, depending on how you look at it. So that seems to me to be true.
I've seen a lot of that. Like, basically, people are like, "This is all a scam anyway, so might as well scam."
Yeah.
And I find that very sad. Like, it's just even just morally, right? Like, even if it's true and even if it's all a scam, like, there's a big difference between like having like trading like something that is a scam, right? And just scamming people out, right? Like, I think that's as dumb as it sounds. Like, there's a big difference of giving people a chance to like make money and lose it. Like, basically, if you give people no chance to win, it's just completely fucked up. But in general, like, I think in general, like, it's just morally very, very a very slippery slope when you're like, okay, it's all the same because it's all a scam. One, because I mean, I don't necessarily even agree with it. I do call the crypto markets a scam like all the time, but like, I don't think you're getting scammed if you're buying Bitcoin or ETH and it goes down 80%. It's like buying another asset, right? Like, if you buy, but if you're going out and you're buying Bold and you're getting rugged, like, that's a different ball game, I think.
We're getting dumped on with like an influencer meme coin type of thing.
Yeah, exactly. Like, I don't understand how that is in any shape or form the same, right? Like, if someone's just directly profiting off of basically not even them being better at you, right? Because that's at the end of the day, like, what a lot of trading is, right? Someone that is better than you will take the money from you in the order book. And that's cool by me, right? But then going out there and justifying like just taking money flat out from other people because they would have been losing it in the market anyway, that's just completely fucked up. And that is something that we've been seeing more and more and more. So I do agree, like, the cynicism is actually off the
like, I'm gonna take
charts,
real
like,
money from you now
insane.
because theoretically you would have lost it anyway. It's like, okay, I guess if that makes you feel better. It's also just, I feel, a form of intellectual laziness where it takes work to build out some sort of framework in terms of if you had to build a spectrum of like what's more acceptable versus less acceptable and where different types of trading and conduct and behavior fall within that. It's much easier to say, fuck it, everything is a scam, so everything is allowed. You know, like, you fix the problem by essentially rejecting the framing. But that's not how we measure. That's just not how we deal with crypto things. Not how we deal with exchanges and fee tiers and what projects are doing with their treasuries and influencer marketing. It's not what we do with lending and counterparty risks. It's not the framework we apply to anything. But it seems like we've crossed the sort of cynicism Schelling point, if you will, where it's like, okay, look, everyone loses money, nothing matters, it's all the same, so just do what you got to do. And that's, I think, a step backwards. But
yeah, and the interesting part is it's not even true, right? Like, there's a lot of people, I think, like, it's obviously, like, in general, I think trading, most people will lose money, right? I'd say it's like more than 90% will lose money if they try to trade and try to turn it into their career. But there's people that do it and do it for years and make money, right? So there's at least a chance. And in general, like, it's like this attitude of looking at life being like, hey, you die at the end anyway, so might as well like get completely fucked over, right? Like, you can fuck people over in real life too if you think like that. Like, hey, they're gonna die at the end of the day anyway. Like, who the fuck cares if
why should I wipe my ass?
Like,
I'm gonna take a shit later, Don. Explain to me. You can't.
Yeah,
oh, GG.
It's like, it's such a stupid argument, but for some reason, like, it's actually the argument that has taken hold, and it's driving me crazy because arguing against it is so dumb, right? You feel like a moron when you argue against it because it just takes you and puts you on such a low level of argument, right? Like, it's basically, if you discuss with an idiot, you're gonna feel like an idiot at the end of it, obviously, right? Because you
do it every Friday. You seem fine, Don.
But yeah, it's just it's very frustrating, and it's like, it's the wrong way to look at things. Like, there is shades of gray, and there's even like there's just straight up like bad stuff, and that should be commented on and not be like, and people shouldn't be like, oh, it's all the same, potato, you're losing money anyway. Because at the end of the day, I've seen a lot of people make this argument that their followers would be losing money anyway, and that just makes me very cynical about their trading abilities. Not gonna lie, because like, if that's your base case, right, like, everyone is losing money anyway, then where's that coming from, right? Because in your history, in your experience, it should be the opposite. It should be like, hey, everyone's winning because I'm winning.
And your friends and peers and the groups you're in, the people you grew up with in the space, yeah.
So I'm a little bit confused where this whole attitude is coming from, that everyone's going to lose their money anyway, because clearly if you're a good trader, you're not doing it. And if you're a good trader surrounded by good traders, your friends are not doing it either, like you said. So it's a little bit confusing. But yeah, is what it is. At the end of the day, like I've been getting roasted enough for being the moral
mostly by me, but
I'm
yes.
tired of it. No. I get this all the time. Like I get like quote tweeted and be like, "Oh, the moral police is here
classic.
again." Like the whole thing. Like I'm just trying to basically, and this is the odd part too, right? When you're on Twitter and whatever, like people follow you because they want to hear your opinion on stuff, right? And then you give your opinion, they're like, "Shut the fuck up." And I'm like, dude, if you don't want to read it, just don't follow me. Like, it's so fucking simple. And people are like, "Oh, I have to see this on my timeline again." Worst comes to worst, you just mute or block, right? Like, it's so easy. I do it all the time, just as like a disclaimer. Like, if someone annoys me all the time, like, I think like half of the people I follow are muted because I'm just like, I'm too tired to deal with this shit. And I have a block list of 1 million people, mostly bots, but there's also quite a few people that I'm just like, I'm not going to deal with. And that makes it much more enjoyable. So I think people should just be doing that.
Well done.
Like, I wouldn't want to read someone's comments or like whatever tweets if I hate them every time. Like, if it makes me angry every time, I'm just like,
I don't know, man. Some people revel in that. You know, they actively seek it out and then pretend they don't, or that they actually don't like it. It's a very weird behavior.
Yeah.
But, you know, 90% of diets fail, Don. And because of that, it's acceptable to shill garbage weight loss supplements that don't work, because they'll end up at the same place, right? That's how it works. If you start, God forbid, you start analogizing that logic of like everyone loses money, so anything is acceptable, and you sort of take it to the real world or apply it elsewhere, you can kind of see how weak it is, essentially.
Yeah. It's actually hilarious. When I was like during this conversation, when I was thinking about it, it's like it's even worse than I thought it was.
It's a really bad
because
point.
You usually don't verbalize it, right? The only times I've seen it is basically been on Twitter, and then you think about it, but you don't actually say the argument out loud. When you say the argument out loud, it just becomes so fucking stupid. But it is what it is. Let's talk about something else.
Really?
Litecoin, for example.
Yeah, we'll talk about Litecoin. I will torture you longer though and start with ETH.
ETH
I know, it's so bad. I just wanted to present this point because there isn't much to say, right? But I want to sort of jump onto the monthly and zoom in. The market's done nothing for a quarter, at least. Yes. So if you look at the last 4 monthly candles, it's even relative to the months that came before it, these candles don't even have candle bodies for the most part. It's just the market's been done nothing for 4 months. And then ETH BTC has also done nothing for even longer than that, especially after the sort of March-ish breakdown candle relative to its recent range on the monthly. That market's done nothing for 1, 2, 3, 4, 5 full months. So, you know, if you're PvPing in the order books,
if you look at it,
0.5, second trading view premium time frame, it's a market that just hasn't moved in 4 months. It's shocking.
Nope. Yeah, I mean, if you just look at the quarterly chart on ETH BTC, you're like, what the fuck is this? Like,
yeah, the quarterly ETH BTC is special. Even quarterly ETH USD, you know, like the market bottomed, it went up, and like that's it. That's your volatility.
I mean, that looks like a complacency shoulder if I've ever seen one.
Support 700 and 300, right? That's the next step.
Oh yeah, the support's good at 300.
This has to be a bottom episode again.
Oh, it has to be.
If it's not, I'm concerned.
But we've been saying this literally for months, and we've been chopping lower every single.
It's not working,
single episode.
I will save our audience the heartbreak and agony of going to the weekly time frame and marking out that level, you know which one, and doing any other time frame stuff, because it's just, even on the daily, it actually just looks like it's drifting lower. It's not even holding its local range. It's kind of,
it's chop, bro.
It's just chop, bro. Yeah, exactly. Let's do the Litecoin thing. So I don't know if you know this, but Litecoin had a halving. And in an unpredictable, unforeseeable set of events, despite this bullish fundamental catalyst, the market actually moved lower. So I'm guessing you're buying because the market is so wrong and the fundamentals are so good and the halving is bullish and something you know, is being mispriced. But yeah, all jokes aside, is this like one of your vindication, feel good, victory lap things, or did you have a specific relatable point you wanted to make about Litecoin?
No. You'd think I have a point.
Oh, sorry, I've been doing this for too long. I should know better.
No, I think this just goes to show like the whole like buy the rumor, sell the news kind of thing. That has been like prevalent in this. Like if you just look back throughout the history of how Litecoin halvings went, they always went poorly. Especially like versus Bitcoin. So yeah, I've had a lot of Litecoin maxis in my comments in the last few days, being like, "Hey, fuck you," basically, which is really funny because I was the hero for a while. But it's basically like you don't want to be in something when volatility is low and the whole reason for it to go up played out, right? Like there was one reason to be in the Litecoin trade, and that was the halving, and people allocated to that, and they obviously have to take profits, right? And that's kind of what's playing out. It's quite beautiful, I think, because the entire other market is not doing anything, right? So this was something that was kind of very telegraphed, but still surprised many. And I think this was one of the few things. I wasn't trading it, I don't short, but this was one of the ones where I think it just actually made sense to take a trade on the short side. So that played out nice. I got a few comments telling me that they showed it, so that's quite cool. I just thought I'd give an update on how it looks. It looks horrendous, and if you look through the history of how Litecoin halvings played out, there is probably more to come on the downside of things. That doesn't mean you should be shorting the range low here. If you look on Litecoin, Bitcoin on daily, that's exactly at range low right now. But I think that range is probably going to break to the downside. Eventually. So yeah, I think this is just a very good example of what not to do. And I saw a lot of people basically ignore the Litecoin halving for 6 months, right, as a possible catalyst, and then pile into it 2 weeks before. And the market just doesn't allow that kind of things, like those kind of things in these kind of low volume environments. This is okay, right? Like you can buy something 2 weeks before the catalyst if the market is more active, but not like this. And I think it's just a really like it's good piece to learn from.
And to be clear, this isn't like a hindsight circle jerk. I think if you go back 1 or 2 or 3, whatever Casual Friday episodes, we discussed this at length. We discussed it in the newsletter at length, trletter.com, and also you on Twitter in your standard style spoke about it as well. So there is useful pedagogical value to it, as opposed to, look, it went down, therefore let me explain why it went down after it's gone down.
Yeah, and I think it's like some like these kind of trades, right, are the ones where you actually just have like edge, or where you can find edge very easily beyond just the charts, right? Because this plays out over and over and over again, and it's logical, right? When you think about it, when you just think about that, the market has very few new participants, and a bunch of people basically sold their coins, like other coins that they had, to get in on the hype of the Litecoin halving, which was very muted anyway. What do they have to do after Litecoin halving doesn't make price go up? They have to sell, or they just have to bag hold. And only a few people selling will lead to like price just going lower. Just makes sense, because there's not like a passive bid on any of these things, given how shitty the market is.
Passive right offer, maybe, but
yeah, yes. But yeah, chart wise, if you look at Litecoin on Litecoin USD on the weekly, we poked above 100. That was a false breakout. It's back in the old range between like 100 and 77, and you would expect this to go back to range low, and I think you would expect this to break range low eventually, even if it's gonna go sideways after. As in, like you had a fake out to the upside, you would expect the fake out to the downside now, especially given you have a bunch of people trapped in a position that they don't want to be in. So like if you want to buy Litecoin, like I think $60 to $65, that's an interesting range. For me, the next time I'm gonna be buying Litecoin is gonna be in 3 years.
I'd be shocked if you're still here doing this in 3 years, Don, at the rate that you're moving away from us.
We'll see. We'll see. The Litecoin halving trade is one that I might come
back out
back
of retirement. Yeah. Thing is, it's funny. We got like the sentiment is quite interesting because we got a comment from one gentleman who was like, "Does anyone else feel like Don's basically checked out or whatever?" And I responded saying, "Well, look, the newsletter hasn't skipped a beat. The Wednesday streams are still happening. Casual Friday is still Casual Friday, and you're more active on Twitter than I am. So I think it's it's a somewhat widespread sentiment." But I think it comes from not from your actual activity or alleged lack thereof, but just the way you're speaking about the market more so than anything else. So that's an interesting thing to observe. But to be frank, we like doing
that will
this,
change.
Like straight up. It never feels like work. It's the only time I speak to Don as per our contract. Our friendship agreement, mandates an hour and a half of communication every Friday, so we managed to fulfill that as well. And it's a fun thing to do. It's just sometimes it's harder to do than others, because we're not in the business of like going to the 15-minute to try to force you to take a trade or whatever. But it's something we genuinely like doing. And I think that's reflected in the fact that it's our most popular show and we appreciate all the support on it. And look, for those of you worried, I will keep Don here for as long as I humanly can. I will use psyops, manipulation, emotional guilt trips, blackmail, my entire compromat folder. It's all coming out to keep him here at least a couple times a week.
Oh, I mean, the thing is, like I talk about this market like it's shit because it's trading like shit, right? And then the moment it's gonna go back to trading like something good again, my attitude is gonna change very fast. I think anyone that's followed me for a couple of years will know this. That like I was telling people, Bitcoin is the greatest thing ever like when it was trading at 15K, right? And like that's just how it worked. Like this shit dumps enough, I'm gonna be like the biggest advocate for crypto. And then the moment it goes up and people just like say stuff that in my opinion isn't true, or like try to kind of sell their project or whatever, like be the salesman of sorts, like that's when I start checking out again. And that's just how it goes. So like I'm very bipolar in that way, where I'm just like I'm the biggest hater when this thing goes up, and I'm the biggest like I love it a lot if it goes down. And then I just take the 2x after it's like when it's dumped, I take the 2x and move away, and then sometimes the 10x's and I'm upset. It's just how it goes.
I look forward to seeing the other side of that coin, hopefully sooner rather than later, Don. As will the audience, I'm sure. But it's nice because I think at this point it's well established that we're not sort of like, at least the show. I'm sure in our own personal attitudes in trading it manifests more, but not like price monkeys, Where like, oh, it's up 1 or 2%, super bullish, and then down 1 or 2%, super bearish, and you're like, especially in the YouTube scene, there's essentially a ton of momentum chasing. If it's a big green day, you're incentivized to make a video about how it is a big green day and how many more big green days you're going to have, and the same works for the downside as well, which makes for terrible trading, but probably good ref link income. So those are the incentives laid on the table for you there. Should we do some news? Because it's been quite busy, at least on that front. Which in itself is curious, right? Sort of catalyst-wise, there's been a crap ton, but looking at the chart, you wouldn't really be able to tell. I've got my big old Casual Friday folder here, which I'm opening up in the most frustrating way possible. And here's the first one. So this is regarding the ETF. This is from the Chief Legal Officer of Grayscale, and it also has some, I've also got some sort of follow-up commentary from the Bloomberg ETF guys. So in this tweet, it says, if the SEC loses its case against Grayscale, as we expect, the path of least resistance would be a wave of simultaneous approvals for all spot Bitcoin ETF applicants, including Grayscale and the other 8 active filings. And that's according to this gentleman tagged here in Bloomberg today, and he's CCing the 2 Bloomberg ETF in-house experts of Eric Balkunas and I think it's Jeff. Let me see. James Seifert. And in general, those 2 gentlemen from the Bloomberg side, they sort of run this internal odds thing as far as ETF approval goes. And they essentially, if I'm correct, if my memory is not betraying me, they went from 1% approval rate for Bitcoin spot ETF to 50% and now to like 65% is their current view. So in their mind, so here's the tweet from James Seifert. Based on recent events and new information, Eric Balkunas and I are officially increasing our spot Bitcoin ETF approval odds to 65%. That's from 50% a couple of weeks ago and 1% a few months ago. So at least the people who are smart with these things seem to be repricing the odds higher. I might have to reconsider some of my priors because I started off as really high on the approval side, and I've gradually been shifting it down. But literally in the last week, it seems like the people who follow this stuff closely have taken a much more favorable view of Grayscale's position in their lawsuit against the SEC. And also, as a result, the market's also been flooding the SEC with more ETF applications. I think we're up to a dozen now, according to this blog article, which is ProShares and Bitwise file for more Bitcoin and Ether ETFs in deluge of application. And yeah, this is again from James Safer. We're up to a full dozen Ether futures ETF filings now. And there was also some rumblings from people familiar with the SEC, you know, one of those pseudo-anonymous sources, being like the SEC would consider a spot ETF for ETH. Well, some spots, some futures, there are different filings. But basically, bigger picture, it seems like the odds are going up of favorable treatment for crypto ETFs. The market doesn't seem to care, which is quite surprising. I thought these headlines yesterday would give a bit more of a jolt and maybe some more decent price action. But either the apathy, either the market's not buying it, or the apathy is so high that no one really cares and people are basically checked out of that trade. So it's one of those really interesting things where this kind of should have been good news, but the market is either ignoring it or it's so fucking weak that it doesn't care. I still don't know where I sit personally as far as ETF approval stuff. I'm probably going to wait for more analysis and clarity there, because I still think the Coinbase issue is a pretty big one. But the best counter argument to that that's sort of circulating at the moment is the legal minds seem to think that Grayscale has a good case against the SEC. And if they win that case, it basically has a cascading effect too. You kind of have to approve everything if you let them convert to an ETF. That's my best attempt at a high-level summary. Have you been thinking about this at all? Have you been repricing the odds in your head? What do you make of this?
Yeah, I've been looking at it, and I think it's really interesting. And I mean, GBTC has been doing somewhat okay, right? And I think in general, like the reason why the market hasn't really been catching up in the last few days is because for the first time, it's actually been the S&P that's been struggling, right? So you had good news, and kind of like I look at it the same way. Like if if Grayscale wins and if they can kind of like do the whole thing, the SEC just kind of has to do like has to kind of jump board on their ETF position, right? Like this is not how it's gonna go. Like they cannot just accept one and then just be like, okay, whatever to the rest. Yeah, I think it's just basically because the S&P is just garbage now. Like we've seen 2 or 3 days of downside. That's horrendous. No, but like for real, like the S&P has just been down, and I think that's why this didn't pick up in the whole thing, because Bitcoin was weaker the entire time than the S&P, and now like when you think about it, even though we've had like massive down up and then down day, we're still trading roughly where we're trading like on the 31st of June. And now you go to the S&P and you kind of see that was pretty much the top on that thing, and it's been down since. So it's been picking up relatively, and that's why it's just kind of like not doing anything. And I think the problem is that we've been having is that the S&P just ran really hard while Bitcoin didn't do anything, and now you'd expect it to retrace a little bit, and that just kind of puts us in a shitty situation again, where yes, we might get good news, we might get like a bunch of stuff that will alleviate a little bit of the sell pressure, but then we will get sell pressure because the traditional markets will pull back.
Yeah, where do you think in terms of levels that might reach as far as the S&P goes? If we start in almost reverse order, it's like the daily time frame for the first time in quite a long time actually broke market structure, right? Sort of below 45.30s or the lows at 45.20s, however you want to mark it. That is a lower low on the daily time frame after that impulse. I mean, yeah, it could be a reclaim, yada yada type of thing. All that is reasonable, but for the time being, it's a break in market structure on the daily. And then the sort of monthly time frame basically hit the absolute extremity, sort of the wick of the pre-breakout range at around 45, 4600, overshot it by a bit and is now back below it and pulling back. So how, like, what levels would this thing have to reach to get like proper worrying for crypto? Because even the super reasonable pullback, something like 4,300, the other side of the monthly cluster, that would basically retrace the entire month of the entirety of the last month's bullish price action and would not look so great. And if we start talking like significantly deeper pullbacks, we start to reach 4,300 down to like 4,100, and that would be like pretty apocalyptic, I think, in terms of how it would look, because it'd be a classic complacency shoulder looking thing. Which isn't to say that the target becomes the Wall Street cheat sheet meme, because we've sort of talked about that enough. But even, I guess my broader point is, even what should be an orderly technical pullback would look pretty shit, given this thing's gone up only for like 1, 2, 3, 4, 5 months in a row. But what levels do you have? What do you think in terms of pullbacks for this thing? Could it be a nothing burger? Maybe this is it.
Maybe this is it. But I'm looking at 4.3K. Like that seems reasonable. Like you would expect, like we closed above that that cluster, and so you'd expect it to turn into support. But you can obviously still wick a little bit. So I think 4.3K, that would be reasonable from like a just pullback kind of viewpoint. In general, if you close below 4.3K, then I think it starts being trouble. Like that's where you start being like in major trouble. Until that happens, I think this is just like I started being like, you need to be careful around the S&P at 4.4, right? And now it's trading at 4.5, and it actually closed above the resistance where I was like a little bit worried. So for me to kind of turn that around, it just has to lose it again. Because we talked about this, right? And like we were like quite positive at 3.7 and all the way up towards 4.3. And yeah, I think if we come back into that old range, that's not the best in the world. But unless we come back in that range, it's not looking too bad to me. That said, like this whole thing seems a little bit odd to me. Like this whole rally seems, yeah, it's a little bit of an AI rally. It's a little bit of like a few stocks
Soft landing,
go up a lot.
yeah, all sorts of.
Yeah, and a few stocks go up, but the rest isn't actually doing so well. Like a few tech stocks, a few this and that did well. Yeah, but the rest.
Your superconductor bags are carrying this market, Don, which aren't even in the S&P 500,
not yet,
but
dude.
it's fine. Soon.
Not yet.
I think, yeah.
I mean, if that kind of validates itself, like the whole superconductor at room temperature story, I think that could get us like a second win on every market, just because of how it would impact. And even if it doesn't, like you would want to buy the dips because that's quite bullish on stuff.
Humanity,
like
yeah.
Yes, like that's huge bull on humanity.
CryptoDonAlt coming soon. We got to be early. We're late to crypto, Don. We got to be early to this. The first superconductor influencers. I'm sure my degree in law from like a long time ago, and your very specialist background as well will be super helpful. And our TA training over the last 7 years, great use of our time, isn't it?
Oh yeah, absolutely great. I mean, the funny thing is, like with my background, it actually like helps a little bit in understanding it. But
I'm not sure how OnlyFans is helpful, Don. Do you want to clarify?
Dude. Yeah, but anyway, if that turns out to be true, it reminds me of early day cryptos, and I think in general, then the stock market is just gonna go wild, right? Like you're gonna have the whole GME kind of style where people are just like on a subreddit, for example, and they just throw up tickers and you just ape it and they go wild. I think that's, if this whole thing turns to be true, we're gonna be in a period of like completely madness for a while. So you want to take advantage of that.
And then it'll die and get repriced. Like, oh, the commercial uses are like 5 years away. Oops, well, that was fun.
Oh, yeah. I mean, that's how it's going to go. That's where you get the dips, right? Like this stuff, like if it's actually true, and this is a big if, and doesn't have to be, and I think like the odds are like actually like less than 50%. But if it's true, right, it's such a big thing that people will reprice stuff 10x, 50x, 100x higher. And then stuff will dump 95%. And then you can actually start picking up stuff that would like kind of work, and that makes sense. But that's trading environments that we love, right? Like that's proper old season trading environment. So that'd be kind of cool. I'm hoping for it, not just because of how it would trade, but also what it would mean for humanity. But also, like, I'm not like I'm not crazy enough to think that this is a guaranteed thing. That's like, I've seen a bunch of people be like, oh yeah, humanity has changed, blah blah blah. I think I want to see some evidence first, and then we're gonna go from there. But if that happens, we might get like a second wind on this thing. But in general, I think if you look at the S&P, like 4.3K needs to hold. If that doesn't hold, I was bullish at 3.7. I was neutral at 4.3, and then I was starting to caution at like 4.4. And I will be heavily bearish if we go back below 4.3. And yeah, until then, I'm gonna be neutral leaning leaning bullish on this thing, as in like pullbacks into 4.4, 4.3 are gonna be interesting buying opportunities. Me myself, I wouldn't trade the S&P. Like I said, I'm just trying to get me some superconductor action.
Yeah, no, I think that makes sense. I think one of the broader problems as far as the S&P in relation to crypto goes is it doesn't take much for that weakness to manifest in crypto, right? So like, we can have a down day or two in the S&P, and that can stuff what should have been a move higher on decent news. So like, the threshold for when does this start to spill over to crypto still seems fairly low when it comes to the downside, and still feels like unattainable when it comes to the upside so far. So that's annoying.
It's a little bit of a struggle. It's really like it's just a really shitty environment to be in when the market doesn't go up, when the S&P goes up, right? Like, that's just that puts us in a really shitty spot, because the S&P will pull back eventually. Like, it does go up only, like historically speaking, but there are months, and more than months, where it just doesn't. And if we don't go up when it goes up, but we go down when it goes down, that's puts us in a really shitty position. And we are in that position right now, where the S&P is kind of like overextended / due for pullback / just pulling back in general right now. And we didn't get any of the upside, but now we're getting battered by the downside. It's the dangerous territory, especially given where we are in the market right now on Bitcoin, where we pumped a bunch because of good news and then couldn't follow through, and we're basically at a pain point. So if the S&P dumps significant enough, a lot of people will liquidate their positions, I think, in Bitcoin, just based on that. And that's not necessarily what you want to be seeing.
Yeah, it's almost like fighting a war on two fronts. You know, it's like we've got enough crypto-specific issues and supply being thrown on top of our heads, and then this macro stuff, which we seem quite sensitive to. Also, not the best, but maybe the superconductors can bail us out of it. I have a go on.
But then why would you be trading crypto?
Shut
right?
up, because it's all I know. It's all I can do. Okay, Jesus, do I have to say the quiet part out loud? Look at you. You proud, sort of traitorous TradFi yield farmer saying, "Oh, well, then why trade crypto?" It's like, because that's my life now. Okay, it's a very simple answer. Coinbase Q2 revenues beat estimates, but USDC interest income falls to 151 million. So a lot of crypto businesses kind of got bailed out by the high interest rates they were getting on their stablecoins. The problem is, because many of them, I mean, Coinbase especially, use USDC, and USDC market cap has been pretty much down only. And at the same time, rates have been coming down. That, as a consistent source of revenue, is getting battered on two fronts. Like, there are fewer of those stable coins, and also rates themselves are being repriced. So as a source of revenue in general, that doesn't seem like, it seems more cyclical than something endemic, I guess. So that's not great. And I think we're kind of in the middle of a covert proxy war when it comes to stablecoins. I don't know how much you've been paying attention to this stuff, but like, you see Paolo tweet. So the CTO of Bitfinex is like talking about, I think he was subtweeting CZ and the new stablecoins that they're incentivizing via Binance. And so it's very, I get quite jumpy and uncomfortable when all this kind of systemically important stablecoin talk rises to the surface, especially if it's sort of major exchange operators talking shit about each other. It's just not the best feeling, really. Do you have any specific color as to what the hell is going on?
I mean, he's just basically trying to take over the stablecoin market. Like, he's failed once, he's trying again. From what I can see, anyway. Like, the whole, but I don't understand why he's like working with Justin Sun on this whole thing. Like, it seems so odd to me. But anyway, like, they're launching their new thing, right? Like, Binance is promoting, like, heavily subsidizing, like, their stablecoin use, because they want a piece of the pie. And Paolo basically was like, they're trying to make us look bad by nuking Tether a little bit, right? Like, they were pushing Tether down in on chain yesterday, and was
allegedly
pretty,
in Minecraft. Yeah,
allegedly, but it was pretty clear like who the perpetrator
right.
was, right? As in, like, the wallet was funded by Binance wallets, which seems a little bit right on the nose, right? As to who is doing it. And he seems to be quite certain that it's like
Well, he
Binance.
wouldn't be tweeting, right? Yeah.
Yes, I mean, and I looked at it, and it seems very, very likely that that's actually the case. And yeah, it's scummy behavior. Not gonna lie. Like, you don't want to, like, if you get stablecoin problems, right? Like, you don't, like, if you attack another stablecoin just because you launch your own or whatever, or you try to kind of get more usage on your own, like, that's a shitty behavior in my opinion. Like, convince people to have your thing by making it better than the other, right? Not by attacking the other, especially in a market that's been getting so wrecked left, right, and center, by like just regulatory action and also by scams left, right, and center. So why add on top of this? I don't quite understand it.
I think he smells blood in the
from
water. If I had to guess, Don, because USDC and the US regulatory environment is so garbage, that thing has been down only. And BUSD got shut down, but stablecoins are just way too profitable not to have a horse in the race, especially if you're the incumbent and biggest player in the exchange space. You probably want that as supporting infrastructure. There's probably like an opportunist play. The issue is Binance owes a shit ton, like in terms of, you know, good faith essentially to Tether, because, and Tether also to Binance. That should be a fairly good partnership between them, because if you think about how much of Binance's total volume and corresponding revenue is from their USDT margined perps, it's like all of it, right? So the amount of money that Tether has made Binance through their perp products is eye-watering. So it's quite a big step essentially to sully that relationship, and something that shouldn't really be the case.
Like, it's completely.
And also,
stupid,
the coin is the stablecoin is called FDUSD, FedUSD. You know, many such cases. Illuminati triangle, etc., etc.
Yeah, and I mean, from what I've heard, Justin Sun has his hands on it as well.
Grubby
like,
little paws.
And that has me nervous. Like, the guy is just literally just, from what I can see, allegedly in Minecraft, right? The guy just does like stuff that seems like at best on the gray side of the law, as in like in the gray area. And like at worst
it's worse than that. Yeah, I was gonna say perfect.
Yeah. And like everything he's in, like basically what he does and what it seems like, he's basically doing so much of that just the authorities cannot catch up, right? He's just kind of like doing more wild shit at every turn, and like hasn't been caught for any of it. And him being involved in this kind of thing just has me nervous. Like, I don't like it. Like, he's such a sleazy person. Like, I don't know, just makes me nervous. I
Why
don't
do you
like
hate Chinese people, Don? Hey, how about you answer that charge?
No, that's not how it is. I love my Chinese brothers and sisters, but I do not like shady behavior, and he does a bunch of that. So has me a little bit nervous in general with the whole Binance action right now. You're not gonna get me close to that exchange. Now, do I think that Binance is going to be in trouble in general, like from a whole, like, is it going to end up like FTX? I very, very, very much doubt so. I think your money's probably safe, but me personally, no thanks. Like, this whole thing, like attacking Tether basically, and like while being in the crosshairs of any kind of three-letter agency in America. Just I don't know.
And his own stablecoin got shut down super recently, right? That's the most shocking part. Like, you've got all this regulatory scrutiny. There's DOJ news that we're going to discuss right after this. And your own stablecoin got shut down. And you're like, you know what? Fuck it. Like, let's run it again. The risk appetite is off the charts, man.
I don't understand. They don't need to anyway.
They don't.
Like the thing is, if crypto survives, right, and you kind of have to guess that that's the case as someone that's in crypto, especially if you're an exchange, right, and especially Binance has a lot of power in general on that, right? Like they have made so much money, and they have so much money that they can actually like significantly contribute to the survival of crypto as a whole. But if it survives, right, like you're gonna make so much money anyway. Like, where is this? Like, why would you be doing this? Why would you be attacking people that you're working with? Why would you kind of like just do stuff that might get you into more scrutiny? I don't quite understand it. Like, it has me very, very confused. Same with their launchpad stuff, really, right? Like they're like launch padding like non-stop basically while BNB set support. Just makes it look like they want the support to hold, right? Like, and that has me more nervous than if they wouldn't be doing it. Just very, very confusing stuff on the side of Binance. But then again, like their business practices, besides like the early days where they were quite smart in just kind of how they did all of it, just basically do everything, don't care about what the rules and regulations are, and then get so big that you make so much money that it doesn't matter. Like that was quite smart, but ever since then, like I've been not necessarily agreeing with some of the business practices that they've kind of been doing. But then again, I'm not one of the richest men on the planet running the exchange. Like that's
yes,
easy,
but you are our
right?
local moral grandstandard on this. This is your your platform to preach on. No, I think all that makes sense. And just to add some color as far as the DOJ stuff. So there was an exclusive via Reuters and some other sources that the US Justice Department is split over charging Binance as crypto world falters. And this is quite a long article you can read. But then there was a scoop specifically shared by Loom here. And it says, US Department of Justice officials are considering fraud charges against crypto exchange Binance, but are concerned about the cost to consumers. According to people familiar with the matter, federal prosecutors worry that if they indict Binance, it could cause a run on the exchange, similar to the one that befell now bankrupt platform FTX, causing consumers to lose their money and potentially spurring panic in the crypto markets, the people said. They are also considering other options, such as fines and deferred or non-prosecution agreements. That outcome would be a compromise, holding Binance responsible for alleged criminal behavior while reducing consumer harm. So the market actually, in terms of the traders I follow and just market commentary back and forth, it was very split on this, whether it's bullish or bearish.
That's quite hilarious, right? Like that's so fucking
I know,
funny.
it is. And so the bullish case, which seems like pretty unlikely, is that if it ends up being one of those non-deferred prosecution agreements or fine or whatever, then this big DOJ regulatory overhang essentially ends up as a slap on the wrist, right? As opposed to much worse outcomes. And that will be easier to sort of reprice and get over. That's the bullish argument. The bearish argument is actually slightly more nuanced, I think, what people give it sort of credit for. And essentially, the obvious bit that stands out in that entire text is cause a run similar to the one that befell now bankrupt platform FTX. Now, the only way you could get a bank run if they're not backing user deposits one-to-one, right? Because how can you just, because everyone withdraws, then technically there's just like no money left on Binance, right? There shouldn't be a sort of negative, there shouldn't be a mismatch there, essentially. So I'm curious as to whether this concern about harm to consumers in a bank run is based on facts and reality and some sort of special insider information, or whether it's just a lazy analog given how FTX went down. And I think that's really the key question at the core of this whole thing. If it's a lazy analog, like, oh, what happened to FTX, it would happen to Binance, then that's not a very compelling argument in general, because, you know, they are materially different from my current understanding. Whereas if the reason they bring up a bank run scenario and this whole consumer harm thing is because they know something about the backing or a potential mismatch, that's orders of magnitude worse. So you essentially have to make a determination as to whether you think the DOJ and the officials in this case are sort of reliable narrators or not. And we simply can't know.
No, I mean, to be honest, and I mean, I'm a big Binance hater, right? So this, like, to add some color, like it seems a little bit odd, just logically, to be like, hey, this could cause a bank run because they don't have the funds to say that, and then don't do anything, right? Because if they're doing something so badly, you would kind of have to shut them down, right? Like you have to cause that bank run, because if you just let them do their thing, it's going to be worse. So I think like the whole like, okay, do they have the funds or not? Like if that's their true concern, like they cannot just let it go, right? Because at the end of the day, like then in 6 months the bank run is going to happen anyway, and then they're going to look like fucking morons, right? Because they're like, oh yeah, we kind of knew 6 months ago, didn't do anything, right? Like if they actually had solid evidence that would be the outcome, I think they would have to do something. As in, like for me, it doesn't really, like it seems like a little bit of a dumb argument. Like either Binance has the money or Binance doesn't have the money. If you're worried about a bank run, like you would have to like shut them down if there was actually any truth behind it. So the fact that they didn't just straight up be like, hey, this is really bad news, just makes me think that they didn't really find anything on that front. But I could be wrong.
It depends how conspiratorial you want to get, essentially, right? Because I saw Adam Cochran. You're probably in some Binance hater group with him, Don, on Telegram. But he made
no. I actually didn't follow him for like I started following him like a week ago. I think.
Excellent. Enjoy the threads. You'll read more than you've ever had in your life. But his argument was slightly more. There are more steps to it, to put it charitably. And he's essentially saying that they know something's up, and this is like a warning flare for people to get their money out of the exchange before they actually enforce. But that is, that requires even more layered like assumptions, and it's a bit more of a reach.
Like that, like imagine you have to justify yourself to like people that got scammed.
Yeah. It's like, oh, but we
like, and then like, but we gave a warning. Like that's an influencer thing to do. Like that's literally a Twitter influencer thing to do, where you're like giving like hints in your tweets. You start changing your profile picture.
Oh, yeah, who's ever done that, eh, Don?
Yeah, but I mean that's not like if US like officials started behaving in that way, I don't know. Like that just seems like a far reach. He's in general, I mean, I like the guy, right? But he seems very reachy in a lot of the things that he does, especially concerning Binance. And that is, like I said, coming from someone that doesn't want to touch the exchange and doesn't like the way they do things. So like I'm not like if anything, I'm biased the other way around. And what he says seems very, very reachy to me. The only thing that I like, and I saw this, like he tweeted about this like a week or so ago, the whole stablecoin thing, and that actually does have me a little bit worried. Like I don't quite understand where that is coming from. But yeah, we'll see. At the end of the day, we'll see. There's not really anything like in predicting this, right? If you're like, I've seen a bunch of people try to be like the Nostradamus, being like, oh, I can predict that this is gonna go down or not, blah blah blah. You're not gonna make money in Binance going down, and you're not gonna make money if it stays up. I think this is just one where you try to minimize risk as much as you can, and that is something that you should be doing
with
anyway,
every exchange,
right?
Yeah.
With every exchange, not only Binance. Like you just don't want to have too much money on them. You want to be having the money that you use to trade, but that's it. And you don't want to use them as a wallet. I mean, honestly, like for people that don't know whatever they're doing, right? I still maintain the fact that like you having your money on Coinbase isn't necessarily much worse than you having it on like somewhere. If you have absolutely no idea what the fuck you're doing, because you're gonna click on a link and your money is gonna be gone. At least with Coinbase, there's a little bit more to it, right? Right, in terms of security. As stupid as that sounds, I think people that know what they're doing shouldn't be having too much money on exchanges. That's the cool thing, that leverage allows you to kind of trade with the size that you would be trading, even if you have less money on the exchange, just to make sure you're insured. But people always like, I don't even want to make that argument anymore, because people just,
it doesn't work.
They start doing that, and then they deposit all their money and just lever up everything. And they're like, oh, I can trade like 10 million contracts now. That's so cool. I'm gonna make, and then they get their calculator out their pocket. I'm gonna make like $1 million if this thing moves 10%. And it's just like, I don't know, it just makes me sad. But this is what leverage is actually useful for, right? When you want to be protecting yourself against these exchanges in a meaningful way, and you still want to be trading crypto. But yeah.
Don't know. Sounds like a
so
pussy
be careful
approach.
Out there.
Just lever up and send it is the appropriate way to do it.
But
yeah, reducing counterparty risk, exchange risks. We've got some sub articles in the longer form Woo article about that if it's interesting. But yeah, broadly speaking, that's should be your frame of mind. But yeah, I think we'll see is the answer. As you mentioned, my base case is that most of the Binance FTX comparisons are sort of lazy, I guess, and just sort of direct analogies as opposed to looking into the differences. But it's not like they are without fault. Like their communications and the whole 4 thing, garbage. How everything is FUD and nothing bad ever happens is garbage. When competitors do it, like lay people off, that's a red flag, as well as offering high APYs and APRs is a red flag. But when they do it, it's fine. That's garbage. And the whole stablecoin wars thing after getting BUSD shut down with the DOJ over their head is garbage. And the launchpad at support thing is uncomfortable. But all of that aside, it's fine. Just, it's chill. The final bit of news I've got is Michael Yegorov has so far sold 72 million CRV tokens in OTC deals. Don, you were tweeting about this, lamenting about the lack of decentralization in DeFi. Do you want to provide some color here? I think the basic story is there was a curve exploit that on its own wasn't that much. It was like 60 mil or something. I mean, that's a shit ton of money, but in the DeFi world, we call that a Tuesday. The problem is there was like a liquidity crunch on chain as a result, and interest rates essentially went up a lot for dollar borrow, and a lot of these lending pools and counterparties were really concerned about taking on bad debt, especially when tokens are used as collateral, and there's basically a systemic spillover concern, especially if this gentleman, the Curve the founder, if he had to liquidate, essentially, that would just have a knock-on effect that would not cripple the ecosystem, but would be like an ugly liquidation cascade. So he's been trying to basically pay his debt down, because I think he's just leveraged against a ton of his money, right?
Yeah, I mean, he bought a bunch of
mansions. And yeah, he's using DeFi as a mortgage provider of some sort.
Dude, it's
ridiculous. What's going on here, Don? Do you have specific color?
I mean, like how it worked in my non-expert view, right? Basically, and this is completely just me kind of looking at the situation and making my own conclusions, right? Doesn't have to be the truth, but basically how it worked is the guy took a bunch of his curve, right? Lended it out, took that money, bought a bunch of mansions. And the reason why you would be doing that, right? There's a few reasons to it, but some of the more obvious ones is just you don't really get flack if you just lend out your coins, right? Like you're like, oh, here you go, you can have these coins. I didn't sell them, right? If a founder sells a bunch of coins to buy mansions, that doesn't really look that good. If he just lends them out, that looks a little bit better, because people are not actually going to talk about it until they're at risk of being liquidated. But that's kind of like how I look at it. Like it's just basically like he took some of his curve, bought some mentions, fair enough, and then price went down, and this is not the first time that he's almost been liquidated, right? Like price went down a lot, and basically like a bunch of these protocols were, like you said, very scared that they were going to be sitting on like basically worthless curve, bad debt, if this goes down, because there's not enough liquidity to catch kind of that kind of liquidation cascade. And now a bunch of people in the DeFi / crypto sphere bought his curve off of him for 0.4. For reference, right now curve price is 0.6, so they bought significantly below market price OTC, to give him to get him some stables so he can kind of make sure he doesn't get liquidated. And it's just kind of funny to me. And the reason why people are doing this, like, one, obviously they get a deal, but two, because they were worried that the whole DeFi space would basically have a massive liquidation cascade / just massive problems, right? Everyone's sitting on bad debt. A bunch of protocols would blow up, all that kind of stuff. And it's just kind of funny when you think about it, that the whole decentralized finance space is basically at risk of collapsing if one of them, because one of them cannot pay his position / his step back, right? Like, it's just absolutely hilarious to me. Because at the end of the day, what he's getting is a bailout, right? Like he's getting bailed out of a position. And the whole crypto space basically exists because the bunch of banks basically got a bailout after they did a bunch of dumb shit. And now we're doing the same thing again in the decentralized finance space. Obviously a little bit different because people are doing it with their own money, all that kind of stuff. But he's selling Curve at 0.4 and currently it's at 0.6. And it's all absurd. Like it's so absurd. And he still has his mansions, right? So it's not like
the important part is still there. Everything else is a
exactly.
footnote. Yeah, but it's classic backroom dealings that was supposed to be that are antithetical to what DeFi is supposed to be about. I guess it's nice that you can see the coins moving on chain and stuff, but you don't know what the side agreements are, the vesting. Wintermute sent theirs over to Binance, and people are asking questions about that. It's more of the same old, and the same old being the traditional financial system. So bailouts, backroom deals, all that stuff.
Yeah, and it's just kind of funny to me because just a week ago, like people were like, this space is so decentralized and like it's so much better. Like all these banks are doing so shady shit, and then we get this, right? And this is the kings of DeFi at risk of getting margin called, and that is risking the entire space. It's absurd. Like it's just absurd. Fair enough to whatever, like his whole side of the thing. Like if he just wants to buy mansions, he just wants to buy mansions. I find it kind of like fucked up though that you would lend stuff out or like borrow like stable coins to do stuff with instead of just being like man enough to just sell the shit, right? Like if you want to make that money, but this whole thing is just
half in, half out, done.
And yeah, no, it's basically like not wanting to take the flack, like the shit for selling his coins, and instead lending them out without having, at least to me, what it looks like, without having the intention of ever paying it back. Just being like, fuck it. And then other people have to bail him out of his position by him selling a bunch of Curve. I don't know.
And it's not like some systemic March style meltdown event that's caused this crunch and bailout. It was kind of a hack and a nuke.
Yeah. And I mean, it's going to happen again. Like if he keeps his position open, it's going to be a third time, but then he's going to actually get liquidated. But he's been working at it.
Is there a trade
we'll see how that goes.
Is your trader brain turning on as far as Curve goes or anything?
No, I will not touch Curve. Like that's a cursed asset to me now.
You're not in the backroom Telegram channels, so you can't possibly.
Yes, exactly. Like it's literally like if this thing goes up, you have a bunch of people that got this way below market rate that actually like it's all traders basically.
If
you think about it, like mostly anyway. So they actually just want to dump on people high as like this is just a free trade for them. Who knows like what they're gonna do on the side of hedging, right? They bought Curve on the market for 0.4. They did backroom deals that they're not allowed to sell for 6 months, as far as I'm aware. But they can still go on exchanges and just short the shit out of it, right? To kind of hedge that. Then it's an instant free month, like it's an instant free trade. Especially if they have their own Curve, right? What you could be doing, for example, like if you have Curve already, you get a bunch more. You hedge your Curve by shorting, and then you just market dump. People freak the fuck out because hey, this is gonna go to zero because this whole liquidation thing is hanging over our heads, and then you make a bunch of money on the short side while having gotten free money because you can hedge it all. I don't know, like given I don't know the backroom deals, and given I don't know like how honest these people are, and a lot of them, like Justin Sun, is involved as well. I just don't trust one bit. This is an asset that's for me dead. Like I will not
off the watch
this.
list.
Yeah. I mean, it's never been on the watch list.
I'm not surprised.
I'm still stuck in 2017. It didn't exist back then. But yeah, no, I hate it. I like absolutely hate it. And this is just goes to show like that we're honestly at this point not much better than traditional markets, and I will not be convinced otherwise. And I know a lot of people will get angry about this, but the stuff we've been seeing in the last 2-3 years is worse than a lot of the stuff that's been going on in the traditional markets. And this is just another one, right? On the poster child of crypto, DeFi. you get something like this. I mean, I'm not surprised, but I'm still saddened by it. So
on that cheery note, we've run out of news to talk about. But yeah, no, I think that those are all reasonable points. I still go back and remember just how absurd the GBTC trade was for the industry, because it basically brought like all the leverage and all the outside capital into the ecosystem and was the king maker trade. That same trade then killed literally everyone. To me, that part is what stands out the most. It's at the same time managed to be the kingmaker and the widowmaker trade all in one asset, all within like 2 years or whatever. So that part is insane. But all the same kind of backroom dealings and Grayscale accepting garbage GBTC as collateral and then that discount widening. Yeah, it's just the whole thing's a disaster. So yeah, that's the show. Hopefully we'll have something next week that's more interesting, but I think it's a testament that we can make these shows as long as they are, hopefully with not too much filler. If you've stuck around, thank you. Please leave a like on this video. We'd appreciate it. Subscribe if you haven't already. If you watch this every Friday and you just kind of check without manually getting a notification, we'd really appreciate it if you were to click that button. The show is always brought to you by Woo. Links available in the description there. Again, if you stick around just for 30 more seconds, we'd be super grateful if you just tell us if you haven't used Woo or haven't signed up, why. It can be as trivial or as detailed or as joking or as serious, preferably serious, as you'd like, but we're looking for direct feedback to dump in the team Telegram channel and make things better, because we actually have some input for once. That's all from us. Have an excellent weekend. Normal content coming next week, and we'll see you then.